I have a bunch of questions for the upcoming union budget because I think it comes at a time when we're probably looking at fears of global recessions, probably rate hikes, and also somewhat slowing economy. In face of that, what's your expectation? And do you expect, like you already have mentioned, that you're actually expecting a correction in the first quarter of this calendar year? What are your key factors or things that you would like to watch out for in the upcoming budget?
Yeah, there is a lot of talk of rationalization of the whole capital gain structure. So clearly,
Right.
everybody is watching out for that. When you talk about within equity, whether you talk about listed, unlisted, equity versus fixed income, real estate, the reality is that it is complex. We have different tenures and different rates for different tenures. How short term is defined, long term is defined. All those tenures are not kind of uniform. So there is a lot of talk about aligning that, and one would definitely be interested to watch out for how that actually plays out. I think once for all, if some standardization is done and we have a sustainable policy, then I think it will be great. Everybody gets clarity that's out of the way, and then there is no suspense. Because right now, what happens that every year there is some amount of speculation about what will happen, what will not happen. So that's one area one is watching for. Other than that, really, if you ask me, as far as policies are concerned, frankly, budget announcement has been made. It's over the number of years become more lackluster as compared to what it used to be, especially after GST has come about. So frankly, not many expectations really. But yes, two or three things. One is rationalization of all taxes, and the second thing, I mean, I don't know, I don't think this is on the anvil, but really, if you ask me, I always think that our dividend taxation is quite onerous. Because on tax paid income, we are taxing again at multiple levels. So I really hope that somebody looks at dividend taxation in our country. It's quite onerous. And the last thing is that, obviously we introduced STT in lieu of removal of long-term capital gains. Now, obviously, long-term capital gains is back and STT still continues. And on top of that, dividend taxes. So, equity as an asset class is heavily taxed. Now, as a country, we need risk capital. As a country, we need people to invest in capital markets. We need risk capital for growth. So I think somebody needs to look at, apart from the standardization, somebody needs to look at equity as an asset class, and the taxation on equity, somebody needs to look at it closely. I think it's quite onerous. On the other hand, if you see fixed income, if you hold a fixed income fund for more than 3 years, you'll be surprised to know today fixed income taxation is more attractive as compared to equity. Equity is that heavily taxed, and this has been like a wild swing in the last 10 years. 10 years back, equity was the asset class which had the most attractive tax structure. But with successive moves, equity taxation has become really, really onerous.
I think Ashish, you've preempted most of my questions and have answered in advance what I could question, but I still have some for you in that case because I'm going to ask you about the sectors you think now government will put their thrust in, and also you
Mhm.
think the sectors now that shall be sidelined or overlooked in the upcoming budget.
No, so clearly, I don't think that anything has to be sidelined or overlooked, really. Well, yes, people do expect that, the government will kind of show some prioritization or some kind of initiatives that they want to push, etc. But this government has been quite consistent in terms of their focus on, investing more, like, driving the economy with government-led capex, a very, very high thrust on infrastructure, a very, very high thrust on defense indigenization. So I would expect them to continue on that path. But I think the third thing which we really need to do is to put more investment in the rural sector, put more investment in agri and agri related businesses. While they have said certain things in the past, but I think just at the level at which we are talking about defense investment and the level at which we are talking about infrastructure, and you can see airports and ports and railways and roads at the same level, we need to probably be able to invest in modernizing agriculture and attract some investment in the rural sector, because the trick is not to move everybody to urban areas. The trick is to make it more productive to live in India's villages, right? So I think I hope that that is something which can be done. I would watch out for that. But I don't think that there are any sectors which would be disadvantaged or sidelined in that sense.
Sure. I wanted to chat last thing over the budget was personal tax exemption limit is effectively 5 lakhs since 1920. India right now does not have a system for inflation indexing the exception
Mhm.
limit, right? You think with higher inflation now eroding the national income, there is a good chance for making personal exemption limit inflation index, something which has been spoken enough and more, given that the inflation has been pretty much on the rising scenario right now.
You see, I think personally, if you really ask me, I hope that there is no change done to any personal income taxes or to even corporate tax, really. See, because while one would think that yes, you are right in pointing out that okay, at the lower end, if you see the government has tried to tax less and less at the lower end. I do agree that but they have been actually the minimum ceiling has been raised. To my mind, at least in the last 4 5 years, I have seen that the minimum ceiling has been raised for where the taxation actually where people come into the tax net. I think the minimum has been raised couple of times. Well, yes, you are right that instead of arbitrarily raising it, they can make it inflation linked, and that could be probably a welcome move. But I think if you see overall our tax structure, while it's very, very heavy at the top, 43, 44% is very, very high, especially considering that everything else like dividend, etc., is also facing double taxation. But I would still say that I hope they don't change anything because, when it comes to stuff like corporate tax, personal tax, everybody will have views about is it high, is it low, and who needs to pay more, who needs to pay less. I think those debates aside, most important is consistency and no tinkering. Once we are witnessing that direct taxes are rising, there are more people coming in the tax net. Hopefully, we have a good thing working. So best not to tinker with it. Maybe just make it easier and easier for people to file their taxes. So I think working on processes is more important than actually working on the rates and those kinds of things.